Okay, today we're going to learn about this trading psychology, all right? So, I thought of it myself, and then I think like we prepared technical analysis, we prepared a fundamental analysis, tell you guys what are the relationship between those news or events or economic data have an impact on respective asset classes or currencies, right? And then also we discussed candlestick and etc. etc. And some of you here might wonder, and you learn all these things, okay? You equip yourself with all this information, knowledge, and why are you still making more losses compared to your profit? So what is the missing piece? So what is the thing that you are looking for, and then maybe can pretty much improve your trading performance? So I thought of it myself, and then I think maybe as we can come out with this content. So hope that after today's sessions, then you might able to learn, and then you can categorize yourself, or you just put yourself in this and then you think maybe you has you know um more or less fall into those traps and without you knowing. Okay, so yep, before I start, let me read out for today's disclaimer. All right, so today's webinar is intended for educational and informational purposes only, and participants shall not take it as financial or investment advice nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. PU Prime and I hosting the session are not liable for any losses or damages resulting from the use of the information presented today. Participants are responsible for independently verifying information and considering their own financial goals and risk tolerance. All right, that's it. That is the risk disclaimer. Okay, so let's dive in. So these are the topics that we are going to cover today. So I'll basically introduce to you what is the trading psychology, why is it important, and then also I will discuss with you the I would say 4 very common behavioral biases, and that maybe we already cause ourselves a lot of trouble without us knowing. And yeah, after I introduce one by one, maybe you can examine yourself whether or not you have fallen into those traps, and thirdly some key takeaway for you guys, and then hopefully after you fine-tune all these biases, and then you understand all these trading psychology behind it, and you can able to improve or fine-tune your day-to-day trading. All right, so yep, what is trading psychology? So I don't want to bore you with all these definition and terms. I would say it is just emotion or a state of mind, and when a trader engage in the financial market. So when we get ourselves into the financial market, by not just looking at it when we participate, when we involve, like when we trade, when we really put money into these financial markets, we will definitely affects our emotion, right? Our state of mind will change because we are human, we are not robots. So maybe, I don't know, maybe one day when this AI is extremely good, extremely advanced, maybe one day they can beat us, they can beat human because they have no emotion. But we human do. But what we can do is try ourselves to be as rational as possible, so that we will not fall into those traps, and make this emotion that control us, control our decision making, right? Control our trading. Time we are right, then maybe we lose the entire train, and then those profit that we potentially going to make wipe out, and then we turn to negative. And then sometimes we get into angry. We get into anger, we angst, and then we are very angry, right? And then what to do? Maybe we might lose control. We trade more, or we like open more trades, or we just close all position. Like we lose our mind, and then when like we just go out and argue to people and things like that, it's like gone crazy. So I would say these two are very important, and then we have to exceptionally control it very well, so that no matter what you learn, we learn like technical analysis, we learn fundamental analysis, we know all the relationship within those pairs or whatsoever. But if we don't control ourselves nicely, or we are in the state of mind that is very healthy, very calm, the rest of the thing will be useless. So these two things will ultimately leads you to have a different result in your day-to-day decision making. So I would say it's not just in trading. I would say it will just have an impact in your life, and sometimes your trading result will impact your life, right? When you lose more than you win, and then you feel angry. So how you feel, how your people surround you is going to feel. They feel your anger. They don't dare to come near to you, right? Things like this. So it is, I would say, very important. You can apply it to your day-to-day trading, and also maybe you can apply it to your day-to-day life. Okay. So we're going to talk about these 4 very common, I would say, behavioral biases that derive, I would say, maybe derive from the greed and angry, or the emotions, from all these things, and then we will lead to these 4 common biases. So the first one is the confirmation bias. So what is confirmation bias? Is like sometimes we have a little bit of knowledge, and then not a lot, okay, and then we are not being open-minded, and when we look at something, when we look at the news, or we look at this particular chart, and then we think, yes, definitely this is an uptrend, this is a signal, I should go in and then open a long position, and without further doing our more thorough homework, where we just get into the trade. This is some kind of thing like a shortcut, like we being lazy. I mean, you can do it when you are like extremely veteran, but I mean, you can shorten some of the time, you can be more advanced, but we have to acknowledge these kinds of bias to happen. Even you are a new trader or a veteran, like you trade for like 5 years, 10 years already, sometimes we fall into this trap. Okay, so what is, and then we might just gather all these the evidence that we can find, and then to support our view, to support our pre-existing belief. So let's say I think that maybe let's say pound. So pound, if you can remember yesterday, I think since yesterday until today, it has declined from its recent peak, right? And then maybe some of you, just without doing any homework, just look at the chart, anything, confirm will rebound from here. You don't need any other thing. Just say, follow me. I'm sure this confirm going up. And then if you want to prove, plug in all these indicators, or find some supporting news. Say BOE governor say something very hawkish, definitely will lift the interest rate again. Or you can see look at this RSI. Very sure is the buying power is coming, is going to be bullish, we will rebound. Things like this, because you already have a bias, already have this pre-existing bias, and you, after that, you go to look for something to support your view, to support all your this pre-existing belief, and then you just go on, you just trade on it, but which is not right. I can think of this example that is like happened to me last month. Okay, this is the UJ pair for in February, right? So you can see that here is like a very strong uptrend. Okay, of course we have like noises in between, right? And then after that, I draw this line. This is the one that I drew myself during that time. Okay, I see what is very strong, consolidate, it's not dropping down, and I have this lower higher low, and then I have a very strong resistance level over here. Then I thought of myself, very sure it's 100% going to break from the above, and then I can open a long position here, and then I'm gonna gain profit. And I think this momentum is easing, but I'll tell myself, hey, but it's not dropping. It still remain at in the middle, is like in between or even above the 50 levels. And I see this MACD is dropping, is approaching this zero line, and maybe for a lot of people, it's a sign of a change of a trend, things like that. The bullish momentum is no longer there. But for me, I thought of myself, it's not crossing. It's still like maintained at above. Confirm is going to break, but yeah, but I was wrong. It just break lower and lower. I mean, of course, at first it's sideways, and then it just break my all my resistance, and I'm making losses. So this is the, if I'm not doing a thorough homework, no matter technical analysis, or I have to look at the news, what happened in Japan, what happened in the world, what's Jerome Powell's going to say, and I can avoid this mistake. So this is like one of the example I can think of. Maybe sometimes when we get used to all the technical chart, we get used to day-to-day news, and then we just couldn't bother more or do more thorough homework, and this will lead to a confirmation bias. We will just make losses from this. So how can we avoid this kind of bias? So I have come up to of this one thing, maybe can help you guys if you guys have fallen into this trap, would be I will find something to challenge my view. Okay, maybe I think it's going up, so I have these 3 or 4 points, blah 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 blah. But of course, and then I will go out and look for something that is go against my view. I will say, why is it bearish? Why? Some factor that will lead to it to become bearish. So, and then I will challenge each other, I will debate, and then I'll see which factor or which point will be more solid. And then I will come up with the conclusion, and then I will execute my trade. So this is the thing that I can share with you guys, and then maybe you can apply to your trading. So ultimately, you just have to be very open-minded and not being lazy. Do more homework and seek for more information. Don't just don't being lazy and just look at the chart and just start trading. Or even worse, you listen to your friend. Listen to whoever, your mentor, your tutor, or even me. If I give you like everyday webinars, if it's your responsibility to seek for more information yourself elsewhere, to have different voices, and then after that you compare and you debate, and then you challenge all these argument or point or whatever. Then from there you learn, and then you build out the principle, and hopefully you can avoid this kind of biases. And the second one is representative bias. That will be similar to the confirmation, because why? It is also sometimes it's because you are lazy, right? And then you just look at something, and then you just come up with a conclusion with it, and without looking further, without seeking extra information, and you just execute your trade. Yeah, I'll give you a very simple example, and then you can know it better. So this is what I can come up with. So if you guys can remember what happened in early 2022, in the like 20 plus February. So what happened? So this is when the first time the Russia and Ukraine war outbreak. I know it happened in the past, but the scale is more, right? So this was the first time, like all over the world, the news or reports, and like Russia have this full scale of attack to Ukraine, then drive all their tank to the border, and then and what happened to the oil prices? This was the news, I think it's like 20 something of February, and then when the news came out, what happened to the oil prices? It's superb, skyrocketing. And if you look at the percentage, is more than 30%, is 36% of gain, and it break above 100 psychological resistance level, and it's not very far away from the all-time high. The all-time high for oil prices, if I'm not mistaken, is about 140 something. So it is not very far away. It's about 125. Right. And then you guys remember what happened last year? We have the Israel and Hamas war, right? This is not this is like catastrophic, but yeah, I just want to share with you guys, and how does it going to have an impact on the things that we trade. So we go to 2003, and I remember it happened in October, the first week of October. Yeah, and you guys can see yourself what happened. Of course, it does rebound, but if you are greedy and then you have this no representative bias, when you look at things very easily, not going through a very thorough homework, you can look at it yourself. It's just 8% increase from the bottom, and it was trapped at below $90. It's not even touching or approaching $100. It just stopped at 90, and guess what? Go all the way down, even worse than before, even worse than when before the war happened. So this kind of thing that is we should bear in mind, and then we need to look through more case study, and then when things happens again, and then we have to do more analysis, or we just have to be open-minded to everything that maybe this is right, maybe the war happened, oil price jump, this is going to happen, but how strong it is, whether it to happen like before, or whether it happen less, the impact will be much lesser than before. And yeah, it can have all kind of scenarios going to happen. We just have to be open-minded, or we do more homework, and then we do a very good risk management, and we can avoid those this what we call representative bias. And touch wood, I don't want this to happen. And maybe next time there's a war coming, right? And we'll just look at maybe gold and oil, and then we'll look at the past result, and we might think of it ourselves. Will it repeat what happens when the Russia-Ukraine war outbreak, or it will be like this Israel and Hamas war, or it or even further, like in like a more in a longer past. Then you do more research, and then yeah, you tell me, okay, yeah, this is it. Okay, just want to share with you. Yeah, this is the representative bias. So it's like very easy. We look at something, or we just some technical charts. We look at it, we think, oh, this is very similar to what happened last month, or this is very similar to what happened last week. Maybe I just close to eye and enter a trade. Sometimes we got lucky and then we make a profit, but how long does it going to last? Maybe the next one we're going to lose. Maybe the next 3 to 5 we're going to lose, because we are just not being hardworking, do more research, do more homework, and we fall into this representative trap. Yep, and then we lose. Yeah. So I would say again, how can we avoid is to find more evidence, right, and see with open-minded, and then stay alert, because I would say experience is very useful. And when sometimes when we trade forex, when we trade commodities, we need to react very fast, right? So I cannot say 100% representative bias is wrong, but I acknowledge the importance of experience, but sometimes experience can be our stumbling block. Okay, it might hinder us from making profit, or lead us to making more losses. Okay, so this is like in a very shadow gray area, where sometimes it helps allow us to make fast decision. Okay, but sometimes it just leads to a result that we don't want. Okay, so I would say just being very open-minded, allow every outcome to happen. You have to acknowledge that, so that we can minimize our angst and minimize the feeling of greed, right? And just take a lot. If you have to cut loss, then you have to cut loss. You don't wait, and you don't blame the markets. You don't argue with the market, because market is always right. Okay, and the third one, I would say loss aversion. I think a lot of us fall into this trap. Even I set myself, very severe in the past, but sometimes still happen now, because we are human. We can't control. We will have emotion. We just don't want to lose. So what is loss aversion bias is you feel the pain of making losses more than you enjoy the joy of making profit. You can always forget, how happy you were when you're making profit. But when you just make one losses, you just keep it in the mind, and then you become very angry, then you just like cannot go over it. You cannot overcome it. You just got trapped into this state of mind, right? So not often, what will we do when we fallen into these biases, we fall into this trap, is we tend to tune our stop loss lower or higher. If we have a short position, we just don't want to lose, and we might pray and anything. It will happen. The correct trend will come, but just sometimes it just not happen. Maybe, yeah, sometimes we got lucky again, but throughout the time, we don't want to trade just like 1 time, 5 times, 10 times. We want to trade 10 years, 20 years, 30 years. We want to protect our capital. We want to protect our money. So I would say just be disciplined. Okay, and then how you're going to avoid it is, I would say, before every trade, right, you need to acknowledge that all the trades, any trades, will come along a chance for you will making losses. The investment guru, the very famous Warren Buffett. Yeah, he's like God to us, to all, like everyone, but he do still make losses, and he have to admit and cut. I can remember one case is the Dexter Shoes. So I think it happened in the 90s. So he lose like billions in this investment, because he made mistake. He have this wrong outlook in this shoe industry, and a wrong anticipation with this particular company. So he have to cut his investment and make losses. So, and then we are just normal people. We are very normal, and then we make losses. But we just have to make sure our win rate ratio have to be like 60 and 70%. That would be enough. It's like beating a lot of people already. It is very hard for you to make like 80-90% of a winning rate. This is like very immortal. It is like God. If you are this kind of people, tell me, I'll follow you. I'll follow your trade. Okay, please. But yeah, the realistic is we are not. And so how to overcome it is, you have to first acknowledge that we have chance to making loss in every trades that we execute, and we set a very solid, a very confirming stop loss level, and then we have to see, is this the loss that we can bear, we are comfortable with? After all this thing, after you are very sure, very confirmed with this level, with this stop loss level, that is it. We don't tune, because I know how to like share this with you guys, but I have to admit sometimes it's very hard. I have to think like, maybe this is just a noise. Maybe this is just a fake fluctuation. I cannot just tune it. Sometimes, when you look at the trend, and then you might have this lucky mindset in your mind, and then you think, yes, it might get over and trend reverse, and I can start to make profit. But I would advise you, do not do that, because sometimes you got lucky, but most of the time the outcome will not be in your favor. You might be losing. Okay, and this is the loss aversion bias. Okay, And the third, the last one over here is the overconfidence bias. So it's also very similar to the representative. It's very similar to the confirmation bias. But this one is just being like overconfident, and you for sure you know this trend's going to come, and no one can argue, and then you take more risks than you expected because you underestimate risk because your eye is covered with your self-esteem because you are very confident. You're sure that this is going to happen no matter what. No one can block me from this happening. I can give you a very recent scenario, okay, which is the gold price. So you guys know gold price has been very crazy, very super, very strong bullish trend. And I don't know how many of you guys have doubt that at some point the trend will reverse. It will have a correction, or you have like a retracement, and then those people that didn't ride on this bullish trend and able to jump in and open a short position, and then maybe we can make a profit, especially when it touched all-time high at near to 2-1 something. And what happened if you are being very overconfident, that no matter what, sure, you know, especially when if you look at a smaller time frame, when it becomes sideways, sure, the momentum is no more, definitely it's going to drop from here, open a short position, hit your stop loss, but never mind, I will open one more because it's sideways, confirm it's going to drop, open more and more and more, and if go up, never mind, when it's sideways, confirm, sure, it's going to drop from here, and then we have to short from here. Overconfident. And guess what? It just keep climbing up, and climbing up. And maybe up here you lose your bullets already, and because you look at all this wick, okay, all this tail, may hit your stop loss, and you're making losses. And when the real trend come, when the trend is already reversed, maybe you didn't enter. Yep. So yeah, this is like a example that I can come up with the overconfident bias, and then if it will lead you to have more losses, or even your entire your capital gone. Because of what? Because when you're angry, because when you try 1 time, 2 time, 3 time, 5 time, you're making losses, then it's like no way you're gonna increase your trading size, or you're gonna leave your stop loss level to the to a very not logic level. Then yeah, sometimes shit happens, right? I don't want to use that word, but yeah, sometimes things that go against us and fall into this overconfidence bias trap. Yep. And yep, so how can we avoid this is just not stop being stubborn, again, being a very rational trader, stay humble, and then maybe we can ask other people for opinion. Sometimes we don't trade ourselves. That's why we join Telegram group, we join Pew Prime Telegram group, we ask people around, and we share our thought, we share our views, and then challenge our mind. And I hope that it will help for us from to become overconfident. And yeah, it might helps. And then just acknowledge all the losses, acknowledge that sometimes trends just go against us. Yeah, just again being open-minded and rational, and minimize your greed and angst, I think can solve pretty much a lot of problem that we address here. Okay. So these are the things that I come up with. I think sometimes, not often, but like sometimes when we are in this situation, you better rest or just get away from the markets, stop trading. And then when you think that you are fit, when you think that you're healthy, only when you come back to the markets, and then hopefully you can make money. So first one is if you feel that you are hungry for money. So I don't know how many of you here is like a professional full-time trader, and then you hope to be one of them. Maybe you can do when you train yourself enough and you gain enough knowledge, and one day you can do. But if you are at the state of you are hungry for money, you look for money, you're in a very urgent situation, then sometimes will lead you to make a full decision making, and you fall into the trap, and maybe just lose more. You're not earning more money, but you lose more. And then the next one is angry. So angry is not like, when if you feel irritated, if you feel annoyed, if you're having like in a bad temper, not result from trading, but elsewhere. You just like argue with your girlfriend or boyfriend, you argue with your mother, you scolded by your boss, things like that, or you like touch wood, like get into a car accident, for example, you feel angry, and then then you hungry for money, you want to repair your car. So these are the time that I think it's not suitable for you to trade, because you might make a wrong decision. And the third one is when you're tired. Sometimes it's like our daily routine. Every time when we go back home or while we work, and then we will try to trade one or two, right? It's our daily routine, but sometimes we are just tired from work, or we are feeling sick, and we are feeling sleepy, and then we can make a mistake. Remember, for forex trading, we have like so many numbers, so many decimal places, right? We have like 5 decimal places at the back, and then sometimes we might just make mistake with a wrong pair. Like we just want to trade GBP USD, but then we go to GBP EUR, for example. And then we enter the wrong trend, get into a wrong trend. Sometimes this thing happens. So these 3 are the things that I think we are not suitable to trade. So how we can overcome this is like we set our own principles. So these principles that you build time to time. So you build more firm, and then like we know when you shouldn't trade, and what situation you shouldn't trade, and how many percent you allow you to lose, how many percent you're going to risk your initial capital. Okay, and then at what point you shouldn't trade. Like maybe you always cannot guess the non-farm payroll, right? So maybe you set this your principle yourself. Do not trade on an NFP. Do not trade on non-farm payroll. This might be your principle. I don't know. Second one, do your risk management extremely well, meaning to say stop loss and TP. You have to have these 2 things, okay, to protect your capital. So if you have no money and then you suddenly become so brilliant, genius, so good in trading, you can foresee the goals going to plunge to below 2,000, but no use, because you have no more capital to trade. You have no money to deposit more. So first thing to do, protect your fund, do your risk management well, and you know like how many percent you allow yourself to lose, how many percent of the no margin use allow that you allow for every single trade, every single position, right? Then protect your capital. This is extremely important. Okay, and so some key takeaway for you guys to avoid those biases. Continuous learning. I myself learn. I watch YouTube. I read books. I go to forum. Just learn more, and just try to avoid yourself from being stubborn, or have a very solid, rigid mindset that, and then you repeat it. You make more mistake and make more losses. We don't want that. Sometimes we have to challenge ourselves. Secondly, emotion control. Of course, again, we are not robot. We are human. We have emotion. But what to do? We just train ourselves to be like AI, be like robot. How you do it? Most of the time, before we open a position, we execute a trade, that is where we don't have much emotion. So set your TP, set your stop loss. You do it before you have emotion. And then you don't tune it. This is also a way that you can control your emotion. And third one, adapt to matter. So you know that everything change. And even you look at technical analysis, it is just using the past trading volume, past trading price to derive all these chart, all these candlestick, try to predict the future. But it is not 100% correct. No one can actually predict the future unless you come from the future. So, yep, you have to adapt to all the situation, allow things to happen, good or bad, have to be open-minded. Okay, so, yep, this is it for today. So I hope that